Hello everyone, thanks for joining us for another edition of Texas Insider TV, brought to you by Speedstream. I'm Jim Cardle. Marc Flaster has been advising Texas's financial institutions for over 35 years and is based with the Sandler O'Neill firm in the financial heart of America, New York City. There's over 650 banks in our state. The economy is in transition, but Texas seems to be doing well. We're pleased to be able to visit today with Marc Flaster of Sandler and O'Neill. Marc, thanks for joining us.
Well, appreciate the opportunity to be here.
You and I have known each other for decades, literally. You are often in Austin, often in Texas, and greeting and helping your customers here, the banks across the state, as I mentioned. Let's get started first, if I can,
Surely.
by asking you about the transition, perhaps. The Federal Reserve Bank has just moved from the Bernanke administration to a Yellen administration. Although we here in Texas feel like we're doing fairly well, what do you see the economic outlook? What's the outlook for the nation's economy?
It's a good question to ask. I think the general opinion is that from a male to a female, that there may be some change in just gender. The actual result, in my opinion, is to be no change whatsoever. Janet Yellen was part of the Bernanke team. She's been there for his whole term. She was a consistent voter, endorser of all the programs, the quantitative easing programs that the Fed put together.
Okay.
And now that the only difference I could say that we might see is that Bernanke, in his conversation with the press and the reports he gave to Congress, had some obscuration that is inherent in being a Fed manager or Fed chairman.
He was a college professor.
A college professor. I don't know. I hold that against him. But anyway, they always have tenure. Remember that thing that she was responsible for, in charge of. It's a lot of concern that the Fed wasn't being clear in what they were doing, and the markets were demanding that they tell us exactly what they're doing. Of course, you can't do that when you're trying to manage things in a back room. But she was put in charge of coming up with a basis of being more transparent with the reporting. And if I were to see any change in the Fed, I would say that would probably be there would be less free access to the newspaper reporting people that other Fed members, especially those who are voting members, had during Bernanke. During Greenspan's term, Greenspan was like a professional coach. He was the spokesman. After the game was over, that's the guy he spoke to. The players, they all went off and did what they did. The Bernanke term allowed more free association. There was a lot of uncertainty in the markets about who do we respect, whose comments were important. Mr. Fisher down here in Texas is responsible for the Fed in Dallas. He was given a clear sounding board, as were others. People didn't say, well, is Mr. Fisher's comments important? Is Bernanke's comments important? Who are we supposed to respect? I think what she will do is she'll shut all those people down. And she will again be the spokesperson. And her first meeting as head of the Fed, or what they call chair of the Fed Open Market Committee, will be this next week in I think it's the 16th and 17th, 17th and 18th of March. 17th and 18th of March.
So maybe not so much public branding per se or accessibility. How about in particular, though, the interest rates and the future impacts of the economy? We're looking at 0% interest rates. Is that something everybody should be planning on for the extended future?
As far as the eye can see, and maybe beyond your and my lifetime.
Really?
Yes, sir. The country can't get out of its own way. Free money is cheap, and it's not to become more expensive. The economy, what's your next part here, as the economy continues to struggle, the Fed has been burdened since the Humphrey Hawkins days to be both in charge of managing inflation as well as ensuring the public welfare at a low high employment rate or low unemployment rate. And the country is not been able to satisfy the second. It has satisfied the first by a lot of reasons that have to do with a development of world trade, the interdependence of our countries today worldwide has moved the surfaces of production to the cheapest resource and to wherever the cheapest product can be produced. You find countries that are tightly managed, like China or some of the lesser world countries, that they produce product to keep their people employed and then sell the product at a loss so that they can get rid of it. Those products come in here to the U.S. and as other countries, and people are not label bound. They look at the price and say, well, that's my price, I'll pay it. So you don't have shoppers who are being discriminating about whether there is child labor involved like that. They look at the price and say, product speaks my need and the price is right and I'll buy it. So the world is interdependent. Today, the cheapest producer of steel in the world is the newest plant because that one has the newest technology. That could be anywhere. It was here in the United States. It's now moved to Korea.
You mentioned coal, steel, resources, a big deal here in Texas. You travel the state frequently, work with the banks across the state. We've had a lot of oil and gas technology. How about drilling down into Texas, literally? What do you see as the driving forces and the outlook for the Texas economy and the lending of financial institutions?
Texas, fortunately for Texas and Texans, this is the we could say it is the nirvana of all the events.
Okay.
We have technology industries growing here in the state. We have production here. We have fruits and vegetables in the agricultural area that are well regarded. If you've traveled abroad and you go and shop in any store or go and have fruit and vegetables delivered to you, unless you're in a very high rent area hotel alike, it's unlikely that you'll do anything other than spit it out. But the grapefruit and oranges that come from South Texas are absolutely delicious, and they look beautiful on your plate. Now, the saving grace to America, the whole country, is the fact that the technology of building gas, or finding gas here in this sector of the United States, has changed the whole complexion of the dependence of the United States on energy.
Now, you say whole complexion, you're talking literally the entire face of the nation, not just in the state.
That's correct. So,
Okay.
so first of all, you have a driving force here that's producing an energy resource that is cheaper than all others, that is safe, it's easy to use, and it's available everywhere. It's available in Ohio, Illinois, western New York State, eastern Pennsylvania, and the Utica finds and Marcellus finds, in Louisiana, and now in California. It's also available in Europe. It's just they haven't gotten beyond some levels of environmental concerns because they're more attached to that than we've been. Now, you can produce gas here in the United States for $3 a million, whatever the number is, and you can ship it, cool it down, put it in a tanker, and ship it to Japan, and deliver it at $12 and sell it at $16. Now, that's a business.
Not a bad deal.
That's a business.
So do you see...
Let me just finish and say,
Okay.
and Japan just went through a terrible, terrible event with a nuclear event. And Japan was building a country because it was completely dependent on imports, that it was going to be the most nuclear fission nation in the world, and now it's eradicated all that, so it needs another resource. Right now they're taking in coal, and they're beginning to take in liquefied natural gas, but that will grow. So if you look at our position with the problems of Iran and the Shah and where we are today, you could say that it won't be long before the Middle East will be a sidelight and will no longer be important to America, and the United States will be energy independent and will be an exporter. And that goes for the Xanadu pipeline and Keystone and all that. But we have an administration that is completely on another field, another foot, and we're going to have to wait for these things to come to the top surface while it's continuing to develop until we get rid of that administration. And then, of course, it's going to be at the next election. No matter who gets elected, energy will be the most important event in the United States, growing from the end of the Obama era.
That will be music to a lot of Texans' ears, obviously. Folks, thanks again for joining us. We're talking with Marc Flaster of Sandler O'Neill out of New York City. One final question, Marc, if I can, and it has to do with the bigger overall picture, the mood of or how does the Wall Street investor view the mood of our nation? It has, under this administration, many say, become a more feeling nation. We're doing more to address the feeling needs of Americans versus the old production line type work that America has traditionally been known for. You all invest for the long term. Is there a difference in an investment outlook based on what you see almost more emotionally in our nation right now?
Well, I'd say, first of all, from the investment standpoint, when you reduce interest rates, which the Fed has done to zero, then you're forced to find other things to do with your money. And so the stock market is a beneficiary of that. We've had a stock market that is more than doubled, starting at 6,500 after the big sell down.
And I guess you're saying likely not to stop?
And it's not likely to stop.
Okay.
The individual investor did not get back into the stock market, according to what I read this weekend, until somewhere in the fourth quarter of 2012. Some might say it was in the fourth quarter of 2013. Now, the individual investor is the last person to ever get on board anything. So the ride is yet to come. But the big thing driving our country right now is that we're becoming much more efficient. All these technology companies are demonstrating that they have an app or an idea that is useful to everybody. It's just a matter of finding out where it could be placed. And corporations today, given whether it be the Health Care Act or just the cost of employees and of managing people, have found that your most expensive part of any business is your people, and the most difficult part is managing people. And so all businesses are trying to do more business or the same business with less people, and that will hold down the cost. So we have no inflation in our country. We haven't had inflation in years and not about to have any inflation. And we have a real problem in terms of how we are going to employ people who have either become, let's say, redundant in some respects, but poorly skilled in relation to what's available. We were chatting earlier about the fact that Texas is such a big magnet. 71 people moving in per week.
Austin per week, that's right.
Per week. 145,000 moving into Houston in the year, as reported in the Houston Business Journal. Every time I read it, I get so excited. I want to move down here. And yet we say, well, there isn't that same flood that we had during the Rust Belt days of people coming down here from Ohio and Illinois.
In the 80s.
And the problem, I think, is that the people don't have the skills, and they're not about to find them. They're not willing to reprocess themselves. And secondly, the government has put out such a big cushion to support these people that they see no reason. In fact, there's many anecdotal things have been written about people who have tried to get a job and gone through the process and then turned around and said, you know, with all the money I get from this, I was getting more money from the government for doing nothing, and I didn't have to get up in the morning. So let's go back on the government payroll. And that's going to continue for quite a while.
Interesting state of perhaps where a certain sector of the economy is, at least. Real quick, if I could, you mentioned about people's job skills or what their retirement may be in the longer term investments. 0% interest rates, it's going to have an impact on people's nest egg, so to speak.
Definitely.
What are the repercussions you see coming down the road?
Well, one of the things we've seen already is there is a reverse mortgage that's being offered. Reverse mortgage has the highest default rate of any product offered by the lender.
Former presidential candidate Fred Thompson's been on the tube advertising those.
He might, but people, they have no resources. They withdraw money from the value of their house, and how are they going to pay it back? The only way they can pay it back is die. And people are not dying so quick today. The average age of longevity of all our countries is extended, and it's extended a lot in a very short period of time, and the healthcare has been a big piece of that. The other thing I point out is that where in the past, even if you had a modestly interest rate of 3 or 4%, and at 3% money doubles in about 10 years. You now have a 0% interest rate. That means there's no return or close to no return on people's savings. And the only thing many people have to live on is their small bit of retirement funds and their savings, and they're having to draw those down today to live. And especially as you get older, your cost of living become not higher, but become more dramatic because a lot of it has to do with health.
Well, speaking of drawing it down, we're going to draw it down and leave it there. You've got an airplane to catch, and appreciate you coming in. Folks, we've been visiting today with Marc Flaster, principal of Sandler O'Neill up in New York City and an advisor to many of the state's financial institutions. Marc, thanks for coming in today.
Appreciate your opportunity.
Be sure and join us again for another edition of Texas Insider TV, brought to you by SpeedStream. Remember, you're either an insider or you're not. I'm Jim Cardle. Thanks for joining us.